Morning, everyone, and welcome to this morning's edition of the MPC Markets Morning Call, 1st of September 2025. Friday night, stocks finished lower, leading into a September weakness, which we do have some seasonal weakness coming up. September is the only month that we have a negative result more than half the time. Averages down 0.7 for the S&P 500. So Nvidia really led the way down overall, but it gave back quite a bit of the week's strength overall. We saw a fairly flat week for stocks as a whole, and we're starting to see these technicals turn a little bit. The Hang Seng was turning last week, and it's the first time we've seen a neutral on the daily for the Nasdaq for quite some time. Let's have a quick look here. This was very much led by obviously Nvidia, Broadcom, Oracle there. Tesla, Caterpillar also had fairly weak results on Friday, and then had some tariff concerns as well. They basically gave some results and then flagged some anticipated higher tariff expenses involving US trade policies. And then Autodesk soared following their very strong quarterly results. It's one of our favourites here at MPC Markets, but overall the only real green you can see here is in more the defensive sectors. United Health still making a bit of a recovery, and you got your consumer non-durables and your health technology and the energy sector and the finance sector doing most of the heavy lifting on Friday. Nvidia was probably dragged down, and I would say the entire sector, with the chip sector, dragged down by the fact that Alibaba surged pretty heavily on reports that they've come up with an AI chip. It's designed for a broad range of AI inference tasks, not necessarily training. But it very much demonstrates their commitment to cloud scalability, cost efficiency, software ecosystem compatibility, and Alibaba's sunk about somewhere in the vicinity of $53 billion over 3 years, and that's very much in line with China's push for semiconductor self-sufficiency, and I would say that competition, particularly with Trump's haggling with Nvidia at the moment over getting 15% of their of what they make out of those chips, the H20 chips, and that really fell on top of Nvidia not giving any guidance as to revenue, any upcoming revenue at all in the next quarter for the H20 chips, or not having any in the last quarter. Dell also had a bit of a shocker on Friday night. They were weaker than expected guidance despite strong prior earnings. Marvell Technology slumped as well. But yeah, Dell was really hit on the back of what they're saying is slowing AI demand, essentially, which is a bit of a shock overall. And probably not very timely for the index, considering you've got overall you've got broad concerns over where we're sitting in terms of valuations for the market overall, and any sort of weakness in demand is going to play out while we sit at these very high valuations. But we had a little bit of economic data on Friday night as well. Core PCE rose 0.3 monthly, reached 2.9% year on year, the highest in 5 months. That was matching expectations, but it doesn't bode well for a bunch of rate cuts leading into the end of the year, which does make me a touch more concerned on, Trump still bullying the Fed. He's persisting with this Lisa Cook dismissal, one of the Fed governors, and the EJ Antoni, who is getting put in place at the Bureau of Labour and Statistics. The Fed's mandate is around inflation and the jobs market, and if you can't get inflation down, I would imagine his I would imagine his man at the BLS is going to make sure that the numbers match up, because they really do need to push to get rates down. They've been pushing very hard, using all sorts of sort of dirty tactics as it stands. So I would imagine that this payrolls number on the Friday night is going to be the real risk. So we don't have a lot in terms of any, we've got Broadcom's really the only one. HP doesn't bode well. Salesforce is on Wednesday there as well. But Broadcom will probably be the main show. Zscaler is in that cybersecurity space. But yeah, we've got some manufacturing data that was slightly, and I say very slightly, weaker than expected over the weekend for China. We've got some manufacturing data for the US. The RBA governor speaks at 6 p.m. on Thursday, and we've got non-farm payrolls on the Friday, which is definitely the big show. It is a public holiday in the States today. It's Labor Day, so we will have Congress come back on the 2nd, Tuesday the 2nd, and there are going to be discussions around that, the debt ceiling and the potential government shutdown. We don't expect there to be a government shutdown overall, but they do love to do some politicking around that, and it will be, it's a bit of a 6-month circus where essentially it'll all be solved at the last minute, but they will really try to push quite hard to shove through anything that they can attach to that bill to get their own way, the Democrats. But I mean, realistically, there's not much they can do with the Republicans controlling all three houses there at the moment. So don't really expect this week to be a particularly busy week overall. One little opportunity might be, we're seeing here, the US dollar was down a little bit, but we saw some flock back to gold and silver. Now, silver particularly, I think this is where some opportunities may come. Technically, both of them look very, very solid. And, despite the fact we've had, lithium and uranium powering along, Bitcoin's been a little bit softer, but the that move in silver is quite significant on Friday night. So we've reached the highest point since August 2011, and as you can see here, and above $40 for the first time in quite some time. The record highs there is around about that $50 mark, which is 25% away from here. However, the gold-silver ratio, which is the ratio of how many ounces of silver make up an ounce of gold, the 50-year historical average for the gold-silver ratio puts, could essentially put silver around just to return to the average, let alone outperform, which it did do back here, could put it back up around the $65 mark. So we're expecting pretty big things from silver. There are a couple of sort of silver miners in Australia that you can have a look at. Maybe Polymetals as one that we've done on the trade for Ausbiz before, and has been an alpha recommendation here at MPC Markets. So, but look, this is a weekly chart, goes back to 2004, and it would not be out of the ordinary on a gold-silver ratio basis for this thing to bust through record highs, and it has been lagging and does tend to outperform to the upside quite significantly sometimes. So plenty of upside there. So there still are going to be some opportunities in this if this September weakness plays out, as I do expect that to probably happen a little bit. There's a few things aligning for that to happen, but I think there'll be a flock back to safety in in gold and silver, and technically they have been looking very, very like they're building up a little bit of steam to break out to new highs. So that's one to look out for. There could be some opportunities there. We tend to use ETP MAG ETF, which is the physical silver ETF, because of just a general lack of quality silver miners here in Australia. But that Polymetals has gone into production as well. Very good timing from them, and they as you can see, I mean, if we rally another 62%, that's some serious margins they're going to be making overall. So, and when silver does run, it does tend to run really, really hard. So watch out for that over the coming week. It could be a decent opportunity. Now, don't forget, tomorrow we've got our Hyperscaling AI free webinar at 12:30 in Sydney time. You can still register, have a look for our socials. And that's, we are, despite being here at record highs at the moment, it's really looking outside the Mag 7, looking at all of the key things that we're going to need for that next phase of AI, and including some resources and some pretty left of center ideas around where you can make some money in those hyperscalers of AI. They've got 4 or 5 of those Mag 7 and those Chinese hyperscalers like Alibaba. So we, it's well worth having a look at that tomorrow. If you can't make 12:30, register anyway, and you'll get a replay of the webinar delivered to your inbox afterwards. So hope everyone has a great day, and you are being a little bit cautious leading into this September weakness, and possibly a good time to be reviewing your portfolio. But again, have a great day, and we'll speak again tomorrow morning.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.